I've got a few examples of trend red down touching the trend pink line, and I've tried to search for a few what I'll refer to as abnormal touches, simply because I want you to see different conditions for when trend red down touches trend pink. The first example that I have here is two classic examples. They're just the normal that we see. One is the left green line down touches pink. It is much closer to the yellow line than it is to the pink line, but the qualification is basically that red would be above pink and under yellow. And so that qualifies it as a down touch. And obviously, after both of these green lines, we have some nice green candles the following day. The right green line is much closer to the pink line, and we obviously have a candle that's the body of the candle, at least, is bigger than the other example, and so this is what we might normally see as an example. I think I see one here as well. I missed this one. Here's another one. Trend pink. This is the one we normally see. Trend red down touching trend pink when the trio is above zero. When that happens, that usually gives us a few days of uptrend. In this case here, it looks like we've got 4 days afterwards of up. The second day obviously is that stall day, but you can work around that if you so choose. But that's the classic down touch on the trend red down touching trend pink. In this example here, I've got a pass through, but I've got a lot of information. If you look here, we've got trend red is actually between the blue and the pink, so it's down touching pink. Green is in there, but green is going up slightly at the same time. And red, of course, is a long ways away from pink, so there is sometimes there's a little more weakness there when they're not real close to the pink line. But in any case, you also have swing Zion going up 3 days, and swing pink going down, and then it comes back up in a low angle up pattern on top. On top of the zero line. Zero is right under that yellow line there. It's passing through yellow, I guess. In the trend chart, in the zip chart, we actually have a red spike, which is a reversal pattern that says it's going to go up the next day. And so we're thinking, well, this should be a really good, we've got a pattern, the red peak. It should be going up. We have divergence between zip gray and zip red. Gray is up and zip red is down. We have I'll say divergence between the pink and the Zion in its relationship above and under the two swing red and green lines, the group of short-term trend lines, just like in the power chart in our comparison with power orange. That oftentimes doesn't, people don't think of that as something that's a viable situation, but it is a contributing factor. The other thing I'll point out here in the power chart is that we've got the indicator lines split, the power 4 lines split. Blue and white are underneath power orange, yellow and pink are above power orange. Typically, again, this is going to be we're thinking that this is going to be a nice green up candle. You're sitting there at the open. Imagine yourself what's going on. You're waiting for the open, and what happens? It actually gaps down a little bit. The previous close on the green vertical line day, that close was at 1795. It opened on the next day at 1784. So it's not much. 93 to 84 is about 9 cents. So it gapped down 9 cents, but that's a key signal for us. It's not going in the right direction. And also always keep in mind your green candle theory and your red candle theory. The green candle opens whether it's at the previous close, above the previous close, or under the previous close. When it opens, it goes down, goes up, builds the green body during the day, and at the end of the day it comes back down typically, and you have a upper tail and a lower tail on the candle. The red candle opens, goes up, then goes down, builds the red candle, and then comes back up at the end of the day, and you have an upper and lower tail. Now, I say the end of the day, please understand that 3 minutes after the open, you can get a mad rush, and you can have the high of the day 3 minutes after the open, and then it goes down, in the form of a red candle, and likewise the other way around. So it doesn't always happen like, I say by the end of the day. There's different market cycles that occur during the day. Now, when that thing opens, the first thing it's going to do is it's going to start down. So that's an automatic reaction to a green candle. As a result, we're thinking, well, this is great. We have a trend red down touching pink. We're anticipating a green candle. And then it goes down 20 cents, and it goes down 50 cents, and it goes down 75 cents, and it goes down $1. And you're really wondering, because the length of this line, high to low, is $18.04 to $16.83. So that's about $1, just about $1.20 from high to low. And so as a result, that's one thing that I wouldn't have expected. I mean, I'm looking at, you obviously see some conflict here. If you look here in the trend chart, you got trend gray in a low angle down bucket, says it's going up. You got trend green in a low angle post, which says it's going down. So there's a mixture of things that are occurring inside of this particular one. But again, if you're trading the daily, you need to be in a lower frame chart to enter the position, like on a 1, 2, or 3 minute chart. And you just pick the bottom and go with the anticipation that you had for the day. Sometimes you'll be wrong. It doesn't always work that way, but you make your decisions on your short frame trading charts while you're in that position, at least on a daily basis. Now, the next one that I'm going to talk about is this one right here. Trend red has down touched the pink line right over here, and we have power red that's gone through pink and blue, and it's down touching into the white. And then of course yellow and Zion are under 0, but they're not under the orange line. So it's basically the power 5 is above the orange line. And in this particular case, you got a downtrend, so you're thinking up, an up movement. However, when you get over here to the this side where the green vertical line is, you have zip green highest. It's actually not at 100, it's at 89.99, so it's basically at 90. And zip Zion is right next to it. Pink is way down. It's disappeared under the red, way down, probably pretty much lowest, with the red underneath the yellow. So from that perspective, we're thinking, hey, we've got a pink-green top, which is a pattern, and pink-green tops reverse going back down. So we've got a force that's pushing here going down. We have a significant, we also have zip Zion going down on the vertical green line day, and there's no indication to believe that it's going to change direction, so that's going to go down. And we know that when zip Zion is highest and going down, we typically go down. And in this case here, we had some pretty flat pricing that occurred, or stagnation, if you will. But going back over here, if you can see it, it's not sure how that shows up on the video, but you can see red went back up the next day. It's just slightly above the pink line on the day after the vertical green line. And then it crosses underneath the pink. Again, the price remains pretty much exactly the same, and it does so for a few days after that. But that's another example of a down touch that's a little bit abnormal. I have two here on the final chart that I want to show you. The red vertical line in one example, and is followed by a red candle, and the green vertical line in this example that's followed by the green candle. Both of these have the trend red above the pink line, but you can see obviously they're both coming up from the bottom, and its location, the trend red location, is just like 1/10 of a point. Each of them are a really small amount distance above the pink line. And so in this particular case with the green line, the green vertical line, if we look over here, we can see how low the price red and green are, which indicates, hey, it's likely to go up. In the green line here, we see the zip green has been at 0. This is the 3rd day now, which then that defines a pink-green bottom, and those are reversal patterns going up. And so on this example here, it's telling us with price lines low, with the zip green bottom pattern, we've got a low, or we're going to go up. With zip Zion, if you're looking here on zip Zion, we've got a flat bottom W, which is a stronger indication for going up than a pointed W, because it's been its 2nd day. Zip pink is 3-4 days climbing up, and the prices are actually dropped. Well, no, on the vertical green line day, we got a higher red candle body than the day before. But in any case, we've got in zip Zion, we got a flat bottom W pattern, which says it's going to be up the next day. In the red line, the red came up and technically butted up against the pink and reversed back down again. Even though the red line was above it just a hair, in a perfect position to go up like this other one did, it went down. The other thing on the green line that I forgot to point out is you've got a sky touch pattern right here in the trend chart, and you've got a qualifying location pattern in the power chart. Zion is above orange and the power 4 are under orange. That's a qualifying pattern position, and the trend, the sky touch it's been 2 days since red crossed over green, and on the vertical green line that second day we then get a really nice up push. And remember, the sky touches are good for 4 days after the red-green crossover. Oh, excuse me, after the red-green crossover. So those are two key examples. We can see. Oh, the other thing is in the red red line example with the swing pink on a low angle up and swing Zion on a low angle down. Both of those are telling us that the next day it's going to go down. And each of them, you don't see one above the short-term trend lines, red and green, and one under very often. But they are here. They are also in divergence. Pink is up and Zion is down. And so that's a good indication of a stronger, when you have divergence, you're likely to get a longer candle, more volatility to the situation. And then again, you have to define the which direction. And remember, when you're on a post, when it goes up and then you have a low angle, that's a post. When it goes down and then you have a low angle, like you do over here in Zip Zion on the green line, it went down and then you had a low angle, that's a bucket. And when it goes up and you have a low angle, that's a post. Posts go down, buckets go up. It's basic low angle. It's basic low angle up, low angle down, at bottoms and at peaks. You can call it whatever you want, but it's a really powerful a way to identify price direction and verify price direction. So two almost identical patterns here with trend red coming up and stopping just above pink, one going up and one going down, and they're quite readily recognizable. Let me point out one other thing to you. On the green line here, trend red, gray up, red up, green up, Zion up, white up, blue up, yellow up, pink up. On the red vertical line, gray is down, Zion is down, yellow is down, and pink is down. There's more of a mixture going down, but there's some going up and some going down. But on the uptrend, all of them on the green side were going up. So pay attention to detail. I can't overemphasize the fact that we deal in technical analysis, and if you'll pay attention, you will be successful. There's absolutely no doubt. You just need to pay attention to what the indicator lines are telling you. We're excited. I kid you not. It's amazing what this system can tell you. It's amazing that you can read what's going to happen tomorrow. And I don't want to say we can see the future, but because we cannot, but we can have a super high probability ratio. And that's what we deal with. It's just like the formula power that we have. It's the patterns and we verify the conditions, and we use the signals, and we end up with high probability trades. We've learned to define those conditions that work well with different patterns. We have 20 plus patterns going up and 20 plus patterns going down. In the gap scenario, or in the gap category, we take 3 of those 20-some patterns, and the 3 are the identical indicators, the down touches in the trend chart, and the proximity group patterns, which are the proximity, the power 4, and Zion making the power 5, and we